that.
Oh, okay. Yeah. Well, it's we'll have your comments on the post-closure review, Tony, if you might.
Mr. Chair, I thought I'd start off with an introduction and just go over it quickly, and then Tony can speak to it in a little more detail.
Okay, fair enough.
That's okay. So overall, I'll refer the committee to the staff report here, and I'll go through this relatively quickly. But you'll see on the first page that the fund is in fact in compliance with the allocation constraints that have been put on it. Won't spend a whole lot of time on that. I would start with a statement on the market activity over the last couple months of the quarter. I think it would be safe to describe November and December as fairly volatile months on the markets. And in particular, some of you may have noticed in the NASDAQ composite, where it's been particularly volatile and as a result of being exposed to these higher bond yields that are attracting investment away from the equity markets. Despite all of this, it is a good news story. Our annual return last year was 10.54%, and that's in a year where I'm sure as we all remember, we've gone through two different COVID waves, both Delta, Omicron, lots of volatility towards the end of the year. But again, despite all of that, achieved a 10.54% return. And that represents a overperformance or an outperformance of 5.64% over the targeted return for the fund. So with that, I'd introduce Tony, and Tony, maybe you can speak to it in a little more detail.
Sure. Thanks, Brad. Yeah, like Brad indicated, total kind of return for the year last year is a little over 10%. More currently, and following through on what he said, like November, December, the last month and a half, we've continued to see the volatility, as you people probably have seen, maybe in your own personal portfolios, maybe on the news. And actually, when I'm looking kind of at the portfolio, we're down just a little over 2% since the start of the year. And we're about halfway through February. You guys remember back to 2020, the first quarter, that was whenever the pandemic hit, we were down over 15%. And we finished that year up, over 6.5 in that range. So, the short-term volatility is here. And we've talked about that before. There's some key factors that are driving this right now. There's inflation concerns, and you see that in the price of gas. I've never seen gas, at $1.60, $1.55. And yet it's happening. And so, that coupled with, there's still pandemic concerns out there. The Omicron seems to be kind of bearing on. It's almost like we're tired of it. I am, but it's there. And so that's still, playing havoc with the markets, good news, bad news things. There's geopolitical concern out there, which is kind of the Russia-Ukraine. One day, Russia's going to invade, next day they're not. And so that's playing a lot of havoc. And the supply chain issues, you've heard about that, the cars, not sitting in the car, Clark's or Nissan or whatever, it's huge. I've never seen it like that. You see a great big empty parking lot. There's also rising labor costs and shortages. People don't want to go to work. And a lot of this, is turning up in the markets and in the volatility. And we expect to continue to see this. However, we are seeing, I think, or a mindset is that, we are working through this and, maybe closer to the end than the start. And, so that's going to bode well for, the stock markets at some point once the volatility does kind of smooth itself out. So, going forward, we do expect this year to give us capital growth, although moderate, probably not like we saw, over the last year, even, with the volatility that happened. But we are seeing, the central bank here now talking about raising rates and kind of keeping inflation in control. Our research or our take on it is that, you're going to have inflation very quickly, but it's going to kind of drop back down very quickly too. So it might be a short-term blip, and we are going to see, the volatility continue to play out in the market. It's almost, to a point that, it's like 2 steps up, 1 step back, and can almost bank on it. At some point, that is going to stop, and it's just going to continue, and give us growth that we're after. So, we don't like to see inflation run rampant. And as a result, that's the major reason that the central banks are stepping in and raising rates. But as we move forward, all these issues will be behind us as they have in the past. And as long as we continue to focus on the longer term, which, this portfolio is set up for that, the exposure to the market. Really, I think, and going from memory, but I think originally when they did the forecast, it was kind of 2036 before there would be any drawdown on this money, and that might have changed already. I kind of forget, over the last couple of years since it's been done, but we still have a long term to go. So, as usual, short-term volatility is there. It's hard to ignore it. Nothing you can do. You see it on the news. It's what makes the news. But on the longer term, as you see and pan out, we do a solid return. And so we're pretty comfortable that the portfolio that we have with the asset mix that we have, over the longer haul is going to see us definitely give us that 4.25, or I kind of forget the number over there, Brad, that you mentioned, but that's the goal. And last couple of years we've exceeded that, and that's only the last couple of years since we made the changes. So not looking to make any startling revelations, not looking to make any changes, really just looking to kind of give an update. We are comfortable where we are at, and longer term comfortable going forward. That's not to say that we're not going to see some more volatility in the next little while. So with that, I'll open it up for questions if there are any. More than happy to take them.
I guess, Tony, I would take that as a no.
Perfect. Always open for any questions. If after we sign off, you guys do start talking and you have something, by all means, and I know Brad, you will, but just give, rifle an email out and we can definitely respond to it. But
Tony, can
anyway,
I throw one at you, Mr. Chair, before
sorry.
I lose my chance forever? You brought up the topic of the drawdown date. With the EIA successful, that changes the drawdown date, right? Do we have any more knowledge about that?
Brad, I think that might be your cup of tea.
It's Brett. Yeah. No.
I'm sorry. Yeah, I know it's Brett. What are we talking about? Apologize.
It's all right. I've been called worse. Sorry, Greg. Could you you referenced a drawdown? What do you mean specifically?
Well, the date of the drawdown for this fund was based on EIA application information, right? So the moment that we get to push that out 25 years, our fund, I guess, jumps up and down and rejoices because it's got that much more time to cook.
That's actually, I like that question, because I asked the same question to Mary Kay just a little while ago, and
Nice.
I said, well, this is great news, right? However, Mary Kay, maybe you're the best one to speak to this, but I think there are some guidelines set by the province, Greg, on the horizon of these funds. Mary Kay?
Gotcha.
So thank you. When that fund was set up, the province put a 50-year time frame in place. So the landfill opened in the 80s. That 2037 date was 50 years from that point of view. They have not changed that standard, so we are required to keep 50 years. This year, we are going to be doing a post-closure fund review, and we'll be contacting the province to see if we have to stay with that 50-year date, or if we can make it more accurate as to how much capacity the landfill actually has. So that's something we're looking at in 2022.
Nice. Okay. Good news story to come. Thank you.
Okay, great. Any other questions? Okay, well, Tony, thank you very much again for an informed report, and enjoy the rest of your day, and we look forward to seeing you at our next meeting.
That's great. Thanks very much. Enjoy the night, guys.
Tony.
Take care. Okay, the next item on the agenda is the fourth quarter operating results. Mary Kay?
Thank you, Mr. Chair. Hi, everyone. I'm just going to take a moment and share my screen with you. There we go. Can everybody see that okay?
Yep.
Perfect. So before I get into the financial statements, which will be the annual financial statements for 2021, I just want to take a minute and explain how our year-end process works, because it is a bit different. So we have a very tight turnaround with regard to when our auditors come in to perform their field work. They typically come in the last week in January. So that gives us really 3 weeks to pull together our financial statements, which relatively speaking is a very short amount of time. So what we do is we gather all the information that we can in that 3-week period. And then we say, okay, I think we've got almost everything that we need. And we run these statements that you see in front of you today. Then we take that information and we have to do the PSAB conversion. So once I start recording PSAB transactions in our accounting system, I do not have the ability to then run these statements again under municipal standards. So although information does trickle in after the fact, it does make it its way in our accounting system. I just cannot then run the statements under municipal standards to present to you the most up-to-date information. So as I present these statements to you today, I'm going to give you what the actual numbers are today, because we have had about $19,000 worth of invoices come in after these statements were run. So I just want you to be aware of that, because when you do see the audited statements at our April meeting, you will notice some slight variations on that Schedule 2, which is the municipal standard number. So keeping in mind, these are municipal standards, the audited statements are going to be under PSAB, so there will be variances for that as well. So as always, starting with the balance sheet, as of the end of December, we had just over $324,000 in cash. That is down over $1 million from the previous month. And if you look down at the liabilities, you'll see why that cash decreased. You can see in this due to capital reserve. So we repaid the interfund loan that we had outstanding as of the end of November of $735,000. We also made payments on our municipal bonds. So you see that decreased by about $514,000. So that's where our cash went in December. Accounts receivable at the end of the year were just under 1.4 million. Our inventory, which is our recycling commodities, was just under 77,000. And then we had prepaids of 239,000 for total current assets of just over 2 million. On the non-current assets side, we had capital assets of 14,638,000. Keeping in mind, this is before we record amortization, which is under PSAB. So that jumped up from the previous year by just over 1.5, or sorry, previous month by just over 1.5 million. And that's the recording of the assets that we purchased from July to December. So in there are our cell costs, which are capitalized, our forwarder that we purchased, and our forklift as well. And then we have a small asset for our bond discount. Our post-closure fund investments sit at just under 4.76 million. That is not reflective of the fair market value of the post-closure fund, because that comes under PSAB. So we will see an adjustment under PSAB of 425,000, which is the 2021 fair market value adjustment. So it's even higher than that actually. We have Elm Tree Trust account of just under 110,000. Our capital reserve totals 2 million. That decreased from the previous month for the 2 transfers that the board approved from the capital reserve funds. And then our operating reserve decreased by 15,000 for the operating reserve transfer that the board approved in December. So total assets under municipal standards as of the end of December were just over 24 million. On the liability side, we have accounts payable and accrued liabilities of 665,000. Our deferred revenue decreased in the month to 21,000. And then our accrued debt servicing decreased as well, as we repaid all those amounts in December. So that finished the year at 4,694. For our long-term liabilities, We have bonds payable of $3,093,000. Our retiring allowance, you'll remember we were waiting on the actuarial valuation for that, and that actually ended up decreasing at the end of the year to $658,000. We have the accrued post-closing costs of $4,697,000. And when you compare that to what the asset is that we held above in investments, before considering the fair market value adjustments, the investments are actually $60,000 higher than the liability. So that's good news. And then we have our Elm Tree Trust liability as well. So total long-term liabilities at the end of December were $8,558,000. Our equity, so you see investments in capital assets, which is really your unencumbered capital assets. So it's your capital assets less your municipal bonds payable of 11.5 million. And then we have our reserve funds, which we talked about above. And then our accumulated surplus of 737,000, bringing our liabilities and equity to the 24 million. Any questions on that balance sheet?
Mary Kay, or Mr. Chair, through Mary Kay, just the receivables. How aged are those receivables? Approximately.
So the vast majority of those would be current. So I would consider that 0 to 60 days. We have about, I would say, 3 to 4% that would be over 90 days, which we are constantly monitoring and calling people, trying to collect those as well. But it's a very small amount based on the total receivables. To be honest with you, I will say that collections have been a challenge in the last year. People are much slower to pay than they have been in the past. But we do have staff that are constantly calling, and we do have good collection history as well.
Okay, thank you.
Any other questions? All right, we'll move along to the statement of income. So the first division that we'll look at is the regional planning division. So the regional planning division is finishing the year with a surplus showing in these statements of $26,694. That subsequently changed only $400. So the actual number right now, as we see it, is $26,253. So a small amount of invoices have come in since these statements were run. And you can see the reason for that favorable variance is savings with regard to expenses. The $5,750 relates to the pool. We did some work on that, and we recognized the revenue to match the expenses. So that subsequently nets out. And then the favorable variance is with regard to expense savings, particularly on the administration expense side. So our planning and development division, before considering any transfers, we have a deficit, which we knew we were going to be running. We've talked about that for a few months now. So before the transfer, we have a deficit of $20,028. And you can see our revenues are actually over what we had budgeted by almost $17,000. We did some work for RSC 8, so that generated about $12,000 in additional revenue. And our blue plate revenue was also higher than what we had budgeted. However, as we've talked about in previous months, we did have to hire an additional staff member to perform building inspections. And that's why you're seeing the overage in these operating expenses. But despite the cost of an additional staff member, management did a really good job of controlling other operational costs. So we saved on other areas and were able to make that overage much less than it actually would have been had they not been able to realize other savings. So operating expenses were over just under $37,000. And you'll recall that the board approved a transfer of $15,000 from the operating reserve. That leaves a deficit for the year of just over $5,000. And we did have some additional expenses come in since this. So the latest number is a deficit of $5,700 for 2021. Any questions on that page before I move to the next one? Okay. So that brings us to the solid waste division. And to the end of December, solid waste has a surplus of, on the landfill side, of 1.1 million. Digging into what's produced that, you can look up at our revenue and see revenues were 378,000 over what we had budgeted for the year. I think I mentioned in my report that the tonnage that the landfill received for garbage was actually the highest it's been in 10 years, with the exception of the 2018 flood. So we have not seen tonnage this high in a long time. We finished the year at 81,530 tons, which was a really big year for us. And all other sources of revenue on the landfill, with the exception of interest, were over what we had budgeted. So that's all good news. Revenue is an area that we really can't control. We're kind of at the mercy of what people are bringing to us. So to see it over by that amount was a good thing for us financially. On the expense side of things, expenses were also under as a whole, but you can see that they do widely vary. Some were over, some were under. So on the operating expense side, we had savings with regard to our equipment, on the fuel and maintenance, and then with regard to our baler as well. We didn't do one of the repairs that we had budgeted for. So that's why you're seeing savings on the operating expenses. And then in the capital expenditure, you'll recall we did do a cell dewatering project. That was a little over $600,000. So that's what you're seeing in the overage of this 304. We had savings in other areas, which subsequently balanced some of that out. So overall expenses were under budget by about $63,000. On the recycling side, we had a deficit of $577,655. That actually compares favorably. We always do run a deficit on recycling. So it was actually $252,000 less than what we had budgeted it to be. And you can see that almost all relates to the additional revenue that we received for recycling. We are benefiting from higher market prices for the commodities, particularly relating to our corrugated cardboard. So over 90% of that favorable variance is corrugated cardboard sales. And then on the expense side, it ran slightly under budget, which produced that favorable variance. So adding the landfill surplus and the recycling deficit, operationally, the solid waste had a surplus of just under $523,000. And then with the additional invoices that have come in since these statements were run, it's just under $507,000. Any questions on that before I move to the next page? All right. So that brings us to power generation. And power generation is another good news story in 2021. I'm really pleased with how this is operating right now. So for the end of December, power generation had a deficit operationally, before considering any transfers, of just under $30,000. Compare that with what we had budgeted, which was to have an operational deficit of about $150,000. So that is about $120,000 outperforming what we had budgeted for this fund. You can see our revenues were about $278,000 higher than what we had budgeted. Revenues for 2021 were the highest that it's been since we began generating power back in 2012. So again, a very good news story. Expenses were over budget by about $157,000 for the year, but the additional revenues more than made up for that overage. So overall, when you consider the solid waste and the power generation, we had a surplus of $492,963. You will recall that we did do a couple of transfers, so $150,000 from the solid waste capital reserve fund to help pay for cell costs, and then $30,000 from the power generation capital reserve fund to pay for some of the repairs and maintenance capital expenditures on the power generation engines. So factoring those two in, we get a total surplus of $672,963. And then consolidating everything, all of the divisions together, we have a consolidated surplus of just under $695,000. And the latest number is, once we factor in those additional invoices we received, is just over $676,000 for the entire organization under municipal standards. And I'd be happy to take any questions on that. All right, I'll turn it back to you, Mr. Chair.
Okay, thank you very much, Mary Kay. Thank you for the good news. Now, Brett, you can give us your staff report on tenders.
Sure, Mr. Chair. I wish I was as technically competent as Mary Kay, because I'd love to be able to just share it on the screen. But past practice has shown that I have a hard time unsharing my screen once I do it. So I'll just speak to it. It's really fairly simple. Although there is only one staff report, it does speak to two separate tenders, and I'll address them both separately. The first tender was issued for a bulldozer. It was approved during the 22 budget process, and at a price of, or an estimated price, I should say, of $475,000. Staff was directed to make the appropriate application to the Municipal Capital Borrowing Board for that purchase. Now, this is something that most of the committee members have probably heard numerous times, but obviously when we evaluate these tenders submissions, we use an evaluation matrix. It doesn't necessarily result in the lowest bid being accepted. What we're really looking for is the lowest cost of ownership over the lifetime of that piece of equipment. In this case, the bulldozer that was being replaced or purchased is a replacement for an existing piece of machinery that's going to be traded in at the time of purchase. And we use that piece of machinery for cell construction and screening and stockpiling clay for site use. In this case, the trade-in allowances for our 2016 Komatsu D65 EX18 bulldozer ranged between $160,000 and $193,000. And we've applied those trade-in values to reduce the prices that you'll see in the evaluation matrix at the bottom of page 1. In that matrix, you'll notice that SMS equipment scored the highest with a total score of 96.7 points, which is a fantastic score. The price bid was $291,000, and they actually offered the highest trade-in value as well. So as a result, staff is recommending that the tender be awarded to SMS equipment. The budgeted amount, again, for this piece was $475,000. More good news, total cost of the recommended equipment is actually $303,470.81. And that includes the non-refundable portion of the HST. And so that works out to $171,529 and change, less than the budgeted amount. Oh, is that Kelly? Have you done that for me? Thank you. I appreciate that. So we're at the top of page 2. So that, yeah, as I was saying, $171,529 and change, less than the budgeted amount, which is great news. And that difference is largely attributable to the larger than expected trade-in values on the old piece of machinery. As many of you know, and I think Tony mentioned in his report, you drive around and you look at these equipment sales businesses, inventory is tough to come by now. And so we really lucked out on that. So I'll leave that there. We'll just set that aside for now before we eventually get onto the motions. I'll now speak to the second tender. A little bit of a different result on that one. The second tender wasn't for a piece of equipment, but rather for work to be performed on machinery within our garbage baling facility. And specifically, the work consisted primarily of the replacement of wear components in that facility, in our conveyor system that moves the garbage from the receiving floor over to the baling side of the building. Now, the budgeted amount in this case was $250,000. We only received one submission on the tender. It was from XL Plating and Machinery. The bid price was $630,053.36. And that includes the non-refundable portion of the HST. but you'll note that that's $380,000 plus, higher than the budgeted amount. So given the much higher expected amount or than expected amount, and the lack of competitive bidders, in this case, again, there was only one bidder, staff recommends not awarding this tender at this time. And we intend to re-tender the work later in the year and request that our engineering consultant that really is designing this project and telling us what we need to replace, solicit additional qualified bidders to ensure a more competitive tender process. And we're hoping that that's going to result in a lower price for the commission to perform the work. And therefore, in this case, it's a recommendation from staff that this tender not be awarded, and therefore no action on this tender is required from the committee at this time. So, Mr. Chair, that moves me to the recommendation. In this case, staff recommends two motions. The first, the tender 01-2022 dozer 01122-022 be awarded to SMS Equipment Limited for one new 2022 Komatsu D65 WX18 as described in the tender for $291,000 plus tax. And motion two, that the acting executive director and or chair be authorized to issue and sell to the New Brunswick Municipal Finance Corporation a regional Service Commission 11 debenture in the principal amount of $475,000 on such terms and conditions as are recommended by the NB Municipal Finance Corporation, and be it resolved that Regional Service Commission 11 agreed to issue post-dated checks payable to the New Brunswick Municipal Finance Corporation as and when they are requested. Mr. Chair.
Okay, thanks very much, Brett. We'll deal with these motions one at a time. On motion one, do I have a motion to approve that? Or
I'll move that,
otherwise?
Mr. Chair, if you'd like. Greg Erickson.
That's great. Thanks, Greg. Do we have a seconder?
Second.
Okay, Stephen, thank you.
Unmute.
Now, I guess the next thing is, you ready for the question?
Just a question, if I may, Mr. Chair.
Yes,
Do
Stephen.
we have a depreciated value on the equipment that we're trading in?
Well, I don't, Stephen, I don't have that value in front of me. I know that the amount was higher than what we anticipated. Mary Kay, do you have that there?
I can look it up. If you just give me about 1 minute, I'll get that to you.
No, I'm just wondering if the depreciated value was more or less than the trade-in value.
Check that for you, Stephen. And Mr. Chair, I should have been more clear. Obviously, the motion in this case would be to forward the motions within the staff report to the board for consideration.
Right. Understood.
Brett,
Yes.
can you tell me which piece of equipment we're trading in? Is it the Komatsu 2011?
No, I believe it was a 2016. Okay, it was a 2016 Komatsu D65 EX.
Okay, so the net book value that we had on it was just under 171,000, and we're getting 193,000 on the trade-in.
Thank you very much.
Any other questions or discussion? Okay, I guess we're going to forward this to the board, but we're voting on whether we want to forward this on to the board or not. So all those in favor?
Aye.
Aye.
Contrary? Okay. Motion approved. The second motion, again, is to forward this recommendation to the board for consideration. Could I have a motion to approve that?
So moved.
Stephen?
Stephen.
Thanks, Stephen. A seconder?
I'll second it.
Thanks, David. So it's been moved and seconded that we forward this motion to the board for consideration. You're ready for the question? So I guess there's no questions on that. So all those in favor signify by saying aye.
Aye.
Contrary, the same. Okay, motion carried. Okay, thanks, Brett, for your work on this, and we'll move on to, we've had some general discussions, but is there any other things that anyone would like to bring forward for some discussion today, or if not, that's fair enough. Okay. Brett and Mary Kay, thank you very much. The committee members, thanks very much for taking the time out of, I guess this is Thursday afternoon, isn't it? And we appreciate that. And if there's no further business, we're going to have a motion for adjournment.
Moved.
So moved. Okay. Good. Well, have a good evening, everyone.